Let's dig deeper into tech here. Shares of Palantir dropping over 20% to an all-time low after an earnings miss. A host of other software stocks all hitting new 52-week lows. DocuSign, Snowflake, Zoom, Salesforce, just to name a few. Let's bring in Tyler Radke, the co-head of Citi's U.S. Software Equity Research. Tyler, great to have you with us.
Good afternoon. Thanks for having me.
I'm wondering, across your coverage universe, what has the multiple collapse been like? And how much of it do you think is justified, and that some stocks may not have ever justified the multiple that they once were at? And where do you see the opportunities?
Yeah, I think no question it's been a challenging 6 months for a lot of software investors, particularly those that are newer to the sector. You're seeing really the first bear market in software for a long time. I think we're shifting from a growth at all costs mindset to a growth at a reasonable cost mindset, and much more of a focus on profitability versus just looking at EV to sales. So I think you're seeing investors batten down the hatches. They're owning names that have weathered downturns, that have that earnings and free cash flow support. So we definitely think it's time to be more selective.
Selective, like which names? I mean, is it just Microsoft, the names like Microsoft, the big cap tech names?
I think that's part of it. Certainly names that have large enterprise customer bases. They can pull levers, whether it's pricing. So Microsoft, ServiceNow, even some of the more value names like Informatica that we cover on the smaller cap side. So those would be kind of your batting the hatches down name. Now, to be fair, I still think if your time horizon is multiple years out, you look at a name like Snowflake, some of the highest growth, but actually does generate free cash flow positive margins. So just given the pullback in some of these names, I think if you are looking out multiple years, which admittedly is tough to do right now, there's still some good opportunities.
I want to ask you specifically about Palantir. Guy Adami watches this one very closely because it's one of the names that he thought you should buy at the start of the year here. The guidance was disappointing. Some other analysts on the street say the second half could look better because you got some tailwinds like the U.S. budget getting finalized and war. That helps Palantir. But where do you stand on this? And more specifically, in terms of the revenue it derives from SPACs, we're seeing this major SPAC collapse pretty much across the board. Should we think that revenue is in jeopardy?
Yeah, so we've been cautious on Palantir for really the last year. Just our concerns that it benefited from the pandemic. Growth was slowing, and they were doing some unusual things, such as investing in SPAC companies to derive revenue growth. And we were just concerned that would ultimately come back to hurt them. And I think that's what you're seeing with this quarter. The second quarter guide missed expectations, was below the street. Regarding the second half, I think it's a little too early to say. Clearly, the company did reiterate their full year guide, but it does imply a steeper second half ramp. And they didn't really provide a ton of details on these contracts, the timing of which, when those can close. These large deals are always tough to predict. So, we still are sell rated on that one. I think there's better opportunities elsewhere.
Hey, Tyler, Jeff Mills here. I'd be interested in your thoughts on a stock like Salesforce, sort of middle of the road, right? It's not really cheap like a Facebook or Google right now, but certainly not in the same bucket as a Snowflake. Absolute multiples still reasonably high, but it's never really traded this cheaply. So just some thoughts on that I'd be interested to hear.
Yeah, I think middle of the road would be a great way to describe it. We don't have a buy, we don't have a sell. I think our concern is we like the business. I think the timing of this business, going into a downturn potentially, front office spending tends to get hit a little bit more than infrastructure spending heading into a downturn. We also worry that given the big pullback in the markets, that a large M&A deal could be on the table. Obviously, this company has a history of doing M&A. We saw them do Slack, a big acquisition, about a year and a half ago, which really kind of disrupted this whole organic growth and margin story. So we kind of worry that, A, you could have growth slow a little bit because of the pandemic, because of a downturn, and B, just valuations coming in could mean that they could do another large deal.
Tyler, thanks for joining us. Nice to see you. Tyler Radke,
yeah, thank
Citi.
You.
Guy, I think I was channeling 2021. Palantir was your hope trade, and now we're on to the dawn trade. So you actually dropped it. But how are you feeling about this space overall? And Tyler had mentioned Snowflake, if you have a multi-year time horizon.
Yeah, it actually makes it worse, though, because, I mean, I love Palantir at 25, 21. I mean, I can give you the numbers, and it's trading, what, $7.50 now? So, I mean, among the myriad of things I've been wrong about, that's on the top of the list. And, you know, maybe some of these, listen, they've been cautious on it, obviously justified. I'll say this quickly. I'll go to Microsoft real quick. I know you wanted to talk Salesforce and some of these other things, but Microsoft, and I think Pete would agree with this, right now at 264, I think is where it closed. You're trading at 23 times next year's numbers. So you haven't seen Microsoft trade at those levels in, I don't think, 3 or 4 years at least. Now, the pushback will be, well, they're not going to get that $11. Okay, that's fine. But, you know, I think their trajectory is fine. And I think in terms of valuation, this is about as most compelling level it's been in a way long time.
Karen, you still short IGV?
I am short IGV. I was just looking. IGV is right back to where it was before the pandemic, and you could say, oh, they've had all that growth. Well, they've all lost a lot of money. Not all, some. Some of those high-flying software names have all lost a lot of money. So, in fact, they should be lower than here. And as we've said numerous times, pendulum swing past fair value. And I don't think the IGV is currently at fair value. So, yes, I'm short, and also it's a bit of a hedge against my long Google and Facebook and Apple and Microsoft.